Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
All right, let's talk about one of the most powerful retirement tools you have, your 401k. But, for a lot of people, there's this little voice in the back of their head, a nagging suspicion that maybe, just maybe, it's not all it's cracked up to be. So we're going to get right into it. And this is really the heart of the doubt, isn't it? You put your money away for years, for decades. You watch it grow, and then you got to pay taxes on it. So what's the point? Are you just kicking the can down the road? Or is there some massive advantage here that's hiding in plain sight? So here's how we're going to break this down. We'll start with that common doubt. Then I've got 3 clear answers for you. One with the math, one with a really simple analogy, and another that looks at your future tax rate. Then we'll wrap up with a solid strategy for 2024 and the one big takeaway you need to remember. Look, let's be honest. Being skeptical about this makes total sense. You work hard for your money, right? The idea of growing it for 30 years just to hand a big slice over to the government at the end? Yeah, that can feel pretty deflating. And this right here is the more sophisticated version of the doubt. The argument goes something like this. Hold on a minute. If I invest in a regular brokerage account, my gains get taxed at a lower capital gains rate. But in my 401k, everything gets taxed as regular income when I pull it out. Am I actually losing here? That is a really sharp question, and it deserves a super clear answer. Okay, so let's move away from the feelings and get into the facts. We're going to look at the actual numbers, because this is where the true power of a 401k becomes, well, kind of undeniable. Let's just run a simple side-by-side comparison. So, imagine you've got $5,000 of your income that you want to invest. In scenario 1, you do it outside a 401k, which means you have to pay income tax on it first. In scenario 2, you put that same $5,000 straight into your 401k pre-tax. And for this example, let's just say we're working with a 25% income tax rate. Okay, so scenario 1, investing outside the 401k. That $5,000 is immediately hit with that 25% tax, so you're only actually investing $3,750. Now, let's say it doubles over time. Awesome! But you still owe capital gains tax on that growth. When all is said and done, your take-home is $6,937.50. Not bad. But what happens in the 401k? Now for the 401k. You invest the entire $5,000 because it's pre-tax. That also doubles, growing to $10,000. Now you withdraw it and pay that same 25% tax, but this time on the whole amount. You're left with $7,500. That's over $500 more in your pocket. So what is the magic here? This right here is the whole game. In a 401k, the money that you would have paid in taxes gets to work for you from day one. It's invested and it's compounding right alongside your own money for decades. It's really simple. You start with a bigger pile of money, so you end up with a bigger pile of money. All right, if the math made your eyes glaze over, don't worry about it. There is a much more intuitive way to think about this that really makes the whole concept just click. Think of it like this. Here's the analogy. Tax deferral is basically an interest-free loan from the government. Seriously, think about it. When you put that $5,000 into your 401k, you avoided paying $1,250 in taxes that year. The government is, in effect, letting you borrow that money at 0% interest. The only catch? You just have to pay it back when you retire. And what do you get to do with that loan? You invest it. That tax money, which would have just been gone, is now working for you, generating its own returns year after year after year. I mean, imagine getting an interest-free loan for 30 years. That is an unbelievably powerful financial tool, and it's just built right into your 401k. Okay, but wait, there's more. There's one other massive piece of this puzzle that we haven't even touched on yet. It's not just about when you pay the taxes. It's also about at what rate you pay them. Think about your income over your whole life. For most of us, our income, and therefore our tax bracket, is at its absolute highest during our peak working years. But when you retire, your income usually drops, which means you drop into a lower tax bracket. So the strategy is simple, but it is brilliant. Your 401k lets you get a tax deduction when your tax rate is at its peak. Let's say you're saving money at a 25 or 30% rate. Then you pay the taxes decades down the road when your rate might only be 15 or 20%. You're basically playing the long game, using your own lifetime tax rates to your advantage. So now that we get why the 401k is so powerful, let's talk about what you can do about it right now in 2024. The government actually wants you to save like this, so they set these annual contribution limits. And for 2024, the IRS has bumped those limits up. You can now put up to $23,000 into your 401k. And if you're 50 or over, you get to add an extra $7,500 on top of that as a catch-up. For IRAs, the limit is now $7,000 with a $1,000 catch-up. These numbers, these are your targets. With all this information, it can feel a little overwhelming. Like, where do I even start? But here's the good news. Financial advisors are pretty much unanimous on the order of operations for smart investing. It's a really simple 3-step priority list. First, and listen, this is absolutely non-negotiable, contribute enough to your 401k to get your full company match. After you've done that, your next goal is to work towards maxing out those tax-advantaged accounts, your 401k and your IRA. Only after you've squeezed every drop of benefit from those should you start looking at a regular brokerage account. I really, really want to hammer this point home. If your company offers a match, it is the single greatest investment return you will ever get. Guaranteed. If they match dollar for dollar up to 5%, you are instantly doubling your money on that part of your savings. No other investment on planet Earth can promise you that. It is literally part of your salary that you are just leaving on the table if you don't take it. So a 401k is not a scam. Not even close. It's an incredibly powerful tool that lets you grow your money faster with a bigger starting pot and then pay taxes later at what will probably be a lower rate for you. The real question isn't whether it works. The real question is, what's your next move going to be to make it work for you? Thanks for tuning in.